Hello students, welcome to today's session on capital adjustment on admission. So let me tell you a small brief about this topic. So basically the concept goes like this, that the time of admission when a new partner is coming in, is joining. So sometimes the existing partners want to adjust their capital basis the new partner's capital or vice versa. So this topic is about that only. So let us start with this topic. Okay. So, hmm. so as I said just now, that there are two cases in this. The case one is where we calculate capital of the new partner on the basis of combined capital of old partners. And the case two is that is when we calculate the capital of old partners on the basis of new partners. Okay. Now, so let us start with case one. And the question, and let me take the question also first of all, and then we can start with. Okay, so here the topic say the question says there are two partners A and B in partnership sharing business with profit and loss in the ratio 2:1. New partner C is admitted to the firm and agrees to bring 1/4 of the total capital of new firm after all the adjustments, right? As its share of the capital. If the adjusted capital of A and B is 41,000, 25,000 respectively, the C's capital, which he's about to bring, has to be calculated. Okay. Now, so let's do this calculation here. Okay. So C is acquiring 1/4 of the share and profit. Remaining is 3/4 to be shared among the by the old partners. Okay. Now, all right. So now, in this given question, we have to calculate C's capital on the basis of A and B's capital. Now, let us see what is the capital contributed by A and B. So, B's capital is 41,000 and B's capital is 25,000. Now, total of this is, that is, plus 25,000. This becomes how much? 66,000. Okay. Now, this 66,000 capital is equal to 3/4 share in the profit. So, sorry, share in the, not profit, sorry, capital. Okay. So, now basis this, total capital should be how much? The total capital now basis this can be, that is, $66,000 multiplied by, now if we reverse this proportion, we get the total capital, that is 4/3. So this becomes how much? This is 22,000 multiplied by 4, that is 88,000. So 88,000 becomes the total capital of the firm as per the capital given contributed by old partners. Now from this capital, we can calculate new partners capital. Okay. So new partner is contributing 1/4 share. So now C's share of capital will be 1/4 multiplied by 88,000, which comes to 22,000. Okay. So this much capital new partner C has to bring it into the firm when he is coming new. Now let's do the journal entry for this, and my question is complete. So journal entry would be now, that is bank account debit 22,000 to C's capital account 22,000. Sorry, 22,000. Now this completes this question. Now let's move to case 2. Okay. So case 2, as I said, is for case 2 is now the old partner's capital has to be recalculated on the basis of new partner. Let's take a question on this also, and so this question says there are two partners A and B sharing profit in the ratio 2:1. C is admitted into the firm for 1/4 share of profit. C brings in 20,000 in respect of his capital. Capitals of old partners A and B after all adjustments relating to goodwill, revaluation, assets and liabilities, etc. are 45,000 and 15,000 respectively. It is agreed that partners' capital should be according to new profit sharing ratio. So A and B's new capital has to be determined and necessary journal entries have to be made. Okay, fine. So how do we do this question? First of all, let's do some calculations, that is working note has to be prepared followed by making the journal entry. So first thing first, that is the question says that the old partners are going to share capital now basis their new profit sharing ratio. So first of all is the calculation of new profit sharing ratio. Now, C is coming with a profit share of 1/4. So remaining share in the profit is 3/4. Now this 3/4 share is will be distributed among the old partners in their distribution. So old partners, old ratio. Let me write like this. So for A and B, this ratio is 2:1. That is 2/3 is to 1/3. Now, new ratio for A will be 2/3 of 3/4. 2/3 of 3/4. This becomes 2/4. Let's write, let's leave it like this because C's share is also denominator 4. So let's do it this way. Similarly for B, now this is for B, this will be 1/3 of 3/4. This comes to 1/4. Now we have their new ratios and new profit sharing ratios as. And as the question says that they are supposed to share the capital in their new profit sharing ratio. Okay. Now let us find out their required capital, that is A and B's required capital basis C's capital. So again, same way. Now we know that C is admitted into the firm for 1/4 share and he is bringing 20,000 as capital. Okay. So total capital on the basis of his capital and profit share will be, again, that is 20,000 multiplied by 4/1, reversing his profit sharing ratio, and we get it 80,000. Now, so as per the capital, or according to the capital C is bringing and his profit share, the total capital of the firm should be 80,000. Now, this 80,000 2/4 and 1/4 share would be brought in, should be brought in rather by A and B. So, accordingly, A's new capital will be 2/4 into 80,000. This becomes how much? 4 2s are 8, that is 20,000 into 2 is 40,000. Okay, dear? And these new capital should be 1/4 into 80,000, and this comes to 20,000. Okay. Now we have these two shares, right? Now we know we have their older capitals also, that is 45,000 and 15,000. So best part is, now let's make a total grid, or you can say a table, and that table is going to give us the exact value, how much which partner is giving or withdrawing. So let's make a table here. Yeah, table is the safest one. So old capital is 41,000 and 15,000, and new capital is 40,000 and 20,000. Okay, right? So, and let's find the difference. So, difference is that old capital contributed by A is 41,000, whereas he is required to give only 40,000. That means, I think this is 41,000 only. No, sorry. This is 45,000. My mistake. This is 45,000. Yeah. So that means now A is already contributed 5,000 more. Okay. So this is surplus. So I'll write this is surplus for A. Now let's talk about B. B is supposed to contribute 20,000 now. He has contributed only 15,000. That means here it is a deficit of 5,000 in case of B. Now with this information with us, we can very easily pass the journal entry. This means A will be withdrawing 5,000 from his capital account. Okay. So the entry should be A's capital account, debit 5,000 to cash account 5,000. Now for B, there's a deficit. That means he has to contribute 5,000 more. So entry would be cash account debit 5,000 to B's capital account 5,000. Okay. So yeah. That's all for today's session. I hope all understood the topic. Keep practicing, and I'll see you the next time. If you have any doubts, please contact me through my Urban Pro profile. Thank you very much.